I'm Chris Reid, Managing Director of Neometals. This is a message for Neometals shareholders who are eligible for the recently announced 1-for-6 entitlement offer to subscribe for new shares in Neometals at 4 cents per share. The entitlement offer aims to raise up to $5.1 million and accompanies a 2-tranche placement to sophisticated and institutional investors, which will raise approximately $7.9 million. Neometals is embarking on a very exciting growth path and will apply the funds from these issues towards the Barrambie Gold Project in Western Australia, which hosts several shallow gold deposits. The first cab off the rank will be, subject to FID, the Ironclad Gold Deposit, which hosts a mineral resource estimate of 15,000 ounces of gold at a grade of 1.6 grams per tonne. We have conducted a scoping study to mine approximately 10 to 11,000 ounces of gold at Ironclad, and we have a production joint venture in place with experienced contractor BML Ventures. On a wider scale, we are planning a substantial drill campaign to ensure that several other gold deposits at Barrambie are in the pipeline for development once we have profitably delivered gold production from Ironclad. Further afield, we're advancing exciting opportunities at our Utah potash and lithium project in the US, and we are also very encouraged by the continued advancement of our Eli lithium and vanadium recovery projects. The offer is now open until 5 p.m. Australian Western Standard Time on Wednesday, the 13th of May, and shareholders can access the offer booklet via the link on the screen below. I can advise that your eligible directors intend to participate in the entitlement offer and invite shareholders to contact the company if you have any further queries on the contact details below. I wish to thank all the shareholders for your continued support and reiterate the message that Neometals is very much on the right track as we seek to become a cash-generative Australian gold producer in the next year. I will now deliver a detailed investor presentation which lays out the Neometals investment proposition in full. Good morning, ladies and gentlemen. It gives me great pleasure to inform you about Neometals and our transition towards becoming a gold producer. So at Neometals, developing gold and lithium production is in our DNA. We started off with a high-grade underground gold mine at Comet Vale that's now being run by Gorilla Gold. We then acquired, refurbished and developed the Meekatharra gold operations. We then developed the Mount Marion operation with Ganfeng and Mineral Resources. And now we are looking to get back into gold production at Barrambie. So Neometals' focus is developing cash flow from our gold operations. To start off with, we're going to do that through a low capex production joint venture and toll milling, and that'll enable self-funding further resource growth. Barrambie is a camp-scale gold opportunity in a prolific gold field. We have a joint venture with experienced contractors BML Ventures. It's a 50-50 production joint venture. They'll do all the mining and transport and arrange the toll treatment, with cost recovery and profits split on a 50-50 basis. This allows Neometals to focus on growing the resource inventory. We think gold's a fantastic base and will continue to be through the global geopolitical uncertainty and to the extent that that abates elevated inflation risk. We still maintain exposure and meaningful exposure to critical metals. Lithium and vanadium are still the most positively impacted commodities in the transition to new energy out to 2050. But we'll focus on the Barrambie Gold Project at the moment. Here's a short fly-through video.
Neometals' 100% owned Barrambie Gold Project is located between the Western Australia mining towns of Meekatharra and Sandstone. This prime location within the prolific Murchison Domain is a hub of active gold exploration, surrounded by numerous operating gold mines and processing plants. Having held the project since 2003 with a focus on its globally significant vanadium titanium resource, Neometals has now recommenced active gold exploration for the first time in 20 years. Situated on a major crustal feature considered vital to the formation of the multi-million-ounce gold deposits of Sandstone and UNM to the south and Andy Well to the north. Neometals' granted and pending exploration tenure spans 357 square kilometres and covers 40 strike kilometres of the Barrambie Greenstone Belt. Flanking one of the world's highest grade titanium deposits are several historic high-grade gold mines dating back to the early 20th century. Notably, the Barrambie and Mystery mines produced at grades approaching 1 ounce of gold per tonne, with operations extending to depths of nearly 100 metres below surface. Based on historical drilling from the 1980s and 1990s, in 2024 the company announced an exploration target ranging between 335 and 775,000 ounces of gold, which underscores the project's significant potential to host multiple gold occurrences. During 2025, the company completed successful RC drilling programs at several targets, including at the Barrambie Ranges Trend, Mystery Area and at the Ironclad deposit, which is currently being prioritised by the company for early development and near-term cash flow. Recent drilling at the Barrambie Ranges Trend, situated to the east of the large titanium-vanadium deposit, returned excellent results in the area of the high-grade workings as well as along strike. This footage shows an approximately 1 kilometre segment of the Barrambie Trend, where the recent drilling returned results up to 5 metres at 5.6 grams per tonne gold, including 2 metres at 13.27 grams per tonne gold. Historic workings have been mapped along 4 kilometres of strike, demonstrating the scale of the target. The historic Barrambie Ranges gold mine produced over 15,000 ounces at 29 grams of gold per tonne between 1905 and 1911. This long section portrays a snapshot of the underground workings as they were in 1908. Also portrayed are the north-plunging high-grade chutes recognised by the miners, which would have produced at many ounces to the tonne. Recent drilling demonstrated significant exploration potential, returning several significant results below these historic workings, such as 2 metres at 19.41 grams per tonne gold, including 1 metre at 38.4 grams per tonne gold, 2 metres at 11.75 grams per tonne gold, and 2 metres at 7.39 grams per tonne gold. This 1.6 kilometre segment of the 4 kilometre Barrambie Trend highlights the exploration opportunity, especially given the initial exciting results from our first exploration program, testing below the sparse, shallow historic drilling. Opportunities beyond the Barrambie Ranges include the Silver Lining and Kismet prospects, and the Ironclad and Mystery targets in the Sugarstone area, approximately 8 kilometres to the north of the Barrambie Ranges. Significant data sets were available from historic drilling, which was used to guide initial drilling, and in June 2025, Neometals announced an opening mineral resource estimate of 13,000 inferred ounces at Ironclad. However, recent infill drilling has increased the confidence in this estimate, and step-out drilling is helping to identify significant opportunity for further resource growth, such as 19 metres at 4.16 grams per tonne gold, including 9 metres at 7.19 grams per tonne gold, located down plunge of the near-surface mineralisation. The Ironclad MRE was updated in March 2026 and now stands at 285,000 tonnes at 1.6 grams per tonne for 15,000 ounces of gold. Significantly, 86% of ounces are classified in the higher confidence indicated category. Based on this updated MRE, the Ironclad scoping study outcomes include the potential production of between 10,000 and 11,000 ounces of gold via open pit mining and toll processing, and generating cash flows between $19 million to $23 million. The broader Ironclad Mystery Corridor has significant exploration opportunities, and initial drilling is providing similar success to that achieved at the Barrambie Ranges Trend, with exciting results such as 14 metres at 11.74 grams per tonne gold, including 6 metres at 26.56 grams per tonne gold, being returned from initial testing below the shallow historic workings. The Ironclad Gold project is well advanced, with next steps along the development pathway to include execution of key agreements, completion of remaining technical investigations, and submission of outstanding approvals documents. Gold occurrences are documented across the length and breadth of the Barrambie project, hosted in various lithologies and of multiple styles. This presents a wide array of targets in both established trends and greenfield settings. With such diversity comes opportunity, the potential for Neometals to build the Murchison's next camp-scale gold project.
The Barrambie Greenstone Belt covers 40 kilometres of underexplored prospective mineralised strike. Gold was discovered in Barrambie in 1905, and they mined it underground till 1911 when they ran out of water. It produced about 15,000 ounces at almost an ounce at Barrambie Ranges, and about 4,000 ounces at sort of 22 grams at Sugarstone. There's been limited gold exploration in the past 20 years that we've owned it, and the data sets have essentially said that 90% of the drilling has been less than 60 metres depth. You know, what we really like about it is the location. You know, we have a look at the greenstone belts that are adjacent, along strike, parallel, and they all hold multi-million ounce deposits. So that is very, very encouraging. And, you know, we just think that getting up into production and generating some cash will allow us to unlock the last unexplored greenstone belt in the Murchison. So our strategy has been to fast track production to enable us to fund organic growth. So what we've done, subject to FID, is a production joint venture with experienced mining contractors. And this is a fantastic endorsement for the investability of not only the project, but just the Ironclad deposit. So these guys are going to wear the working capital, put it into production, fund the transport and toll treatment, then recover their costs and split the profits 50-50. It's a fantastic low capex, low risk pathway for Neometals. That organic funding will enable broader exploration as we really start to unlock the Barrambie Greenstone Belt. And, you know, what we really like is the fact that we've got gold in 4 different lithologies, you know, 4 different rock types, which tells us there's multiple mineralizing events. All of the original mines were underground, and now we're looking back to start off with to see the open pitable mineralization, to get into early cash flow and more early cash flow and extend the mine life, and to develop these as potential satellite deposits. So there's multiple walk-up drill targets, you know, along that 40-kilometre strike length through our tenement package. What we see here is a plan view looking down on the far left there, top to bottom, through the Ironclad deposit, and then a couple of sections marked AA prime, BB prime. What you can see it's like an open pit from the 80s. You know, originally they were underground mines, and then we've found open pit mineralization exists around the higher grade. And, you know, a very simple open pit operation. As we look to Ironclad and the mineral resource estimate, we're having a look at a long section here. And what you can see is it's a very gentle, you know, what I would call a starter pit. You know, the strategy has been to spend the minimum amount of capital to get to a resource that justifies getting a contractor in to do a production joint venture. And you'll see that we have a significant amount of mineralization and high grade mineralization outside the pit shell, sitting in the inferred category. What we have to do is we have to infill and extend that. What we're finding is that, you know, there's some fantastic grades there, you know, 26 meters of 4, 17 meters of 4, then outside the pit shell, 19 meters of 4, including 9 meters of 7. So, you know, not only do we think it'll make a bigger open pit, we think there's all the hallmarks there of a reasonable underground operation as well. The scoping study, like I said, this is for the starter pit. It shows that we can make somewhere between $19 and $23 million on a 100% basis at pretty conservative recoveries. We've done that because the first phase of metallurgy, on ore grade recovered very, very well, sort of 95, 97. On some of the lower grade, it recovered 75. So we've got more metallurgical test work that'll go, but we fully expect that, it will be a high recovery operation. So there's plenty of upside. It's a simple 12-month mining operation, and it behooves us to make it bigger, to extend that. We want the contractors there for longer, and then that will give us enough time to bring in a couple of satellite operations to extend or increase production. So what we did is we marked out a mining lease application over Lost Chance, Ironclad, Sugarstone and Mystery. And this is what the subject is subject to the production joint venture. So BML Ventures, they've done about 7 or 8 of these production joint ventures. Jeffries for Oric was one of their standouts. They did a pit cut back at Wiluna for the administrators on the Golden Age pit. It made a significant amount of money in a reasonably short amount of time. So BML, like I said, fund the majority of the pre-mining activities. So we do have to put some money in for the grade control, but otherwise they are funding that up to the FID. Once the FID is made, they fund and manage the mining, haulage operation, toll milling, and then split the profits. So minimal upfront capex required for NMT, and most importantly, it's a template for how we might develop the other satellite deposits that we'll find on our tenure. The indicative forward work plan, next cab off the rank is the grade control drilling. So the guys at BML are just liaising with the drilling contractors on that. We're just liaising with the drilling contractors now on the Ironclad North, or extending the Ironclad resource to the north. We will then, after that, have a look at the Silver Linings and Woodies satellites. So all roads lead to an FID towards the end of the year, and then hopefully mobilise contractors early in the new year. So the resource extension. So if we look along the Mystery, or the Ironclad Mystery trend, both originally small underground operations, high grade, we've been able to define, really good mineralization. You can see there the mineralization above a gram we've marked out in green. We actually have as much 1 gram material outside of the pit that we have inside of the pit. So infill drilling is the surest way to add ounces for us. And so that will start later this quarter. And we'll focus on this before we get stuck into the greenfields and brownfields operation. So the first brownfields target we've got there is Silver Lining. So this was discovered in a line of rab holes, all very, very shallow. You're looking down at sort of 50 meters sort of deep for these. The mineralization covers an area of 300 meters by 300 meters. It's got geological similarities to Ironclad, quartz between 2 map structures. Potential open pit stockwork mineralization. We've got some nice grades there, sort of broad grades, 10 meters at 2.44, higher up, and then getting down deeper into the higher grades. So that will be the first cab off the rank in terms of building out a satellite. The second one is Woodies, and we really like Woodies. It's had a very, very little done on it. Historical drilling, I'm thinking probably 30 years ago, well before we acquired it. So we've defined mineralization over about a 1,300 meter strike length, the trend. And so we're going to target about 1 kilometer of that, targeting sort of 5 gram mineralization at open pit depths. The best drill results that we've got are 17 meters at 5.44, including 5 meters at 13.28. So, we are targeting, a quartz filled shear that's highlighted there in grey. We've also done some copper exploration. Off our northern boundary is Solstice Minerals Nanity Well, where they've had some pretty good success at finding higher grade copper gold around what was historically known as a low grade disseminated copper gold. And so we started going through the data and discovered that we had actually an old copper mine where they'd mined copper ore via a couple of shafts in 1944 there at about 16%. And then the same guys have gone back in the late 50s, early 60s and taken about 1,300 tons at 9% that they trucked down to Kwinana to make into copper sulfate fertilizer. So we sent the boys out to ground truth it and take rock chip samples, and we got some fantastic samples, which was great. We wanted to make sure that it wasn't just a surface enrichment, so we drilled 5 scissor holes. What we were able to discover is primary copper sulfide mineralization in bornite and chalcopyrite at depth, which is fantastic. 5 meters at 1.7, including 1 meter at 5% copper, and a couple of ounces silver, which was we were very, very grateful to see that. That certainly confirmed that we have a sort of primary copper system there, and currently we're doing a IP survey to see if we can get any highlights. And what we've also found is that structurally we have 3 other targets that we think are analogous to the Nanity well setting of Solstice. So we are looking forward to doing a little bit of copper work. And so, the takeaway for Barrambie is, it is truly a camp scale opportunity. 40 kilometres a strike, that's almost the distance between Kalgoorlie and Kambalda. We've got a plethora of targets, and most of these were old underground mines. What we've been able to do is to take the lowest hanging fruit, which was ironclad. We put our first drill holes in February 2025. In March 2026, we've been able to do a production joint venture with mining contractors after putting out 2 resource estimates and a scoping study. And hopefully within another year, we'll be in production, and I think in Western Australia and certainly the mining industry in general, developing cash flow within 2 years of your first drill holes is the exception and not the rule. So, I'd like to thank our team for a fantastic job in doing that. And we've got fantastic prospects now that we will elevate up. That's why we've got such a big exploration target there, is because of that prospectivity. I'm now going to shift tack slightly to lithium, and we've got a long history in lithium. We've been in lithium since 2009, developed the world's 2nd largest hard rock lithium operation at the time. And we've been looking to get back into lithium at the right point. And the right point came to us last year, and we've been working on this project in the background since February 2025. We optioned it up late last year and exercised the option to now own 51% of it. The strategic rationale is, and why we love this, is that, one, it's a known lithium potassium basin in the US. Utah is a stable and supportive jurisdiction. In 2023, it was the Fraser Institute's #1 ranked mining jurisdiction in the world. What we've been able to do is to access existing inactive oil and gas wells, subsurface data and infrastructure, which will enable us to accelerate the exploration and evaluation of the deposit, and to lower the cost of doing that without having to drill wells, and to speed it up. We know that direct lithium extraction works. It has been validated by a number of people on the Paradox brines, which enables processing of lower grade lithium brines through selective recovery. We've obviously got deep lithium brine processing expertise. We have the Eli process that we own 70/30 with MinRes. We're currently commercializing that with Rio Tinto. We finished piloting that process, which takes lithium chloride from a brine through to lithium chemicals at what is about half the traditional processing cost. So we've got a fantastic back end for it. The infrastructure, it's very hard to overstate the importance of infrastructure when you're having a look at projects of scale like this. We're fortunate in that our partners have access to 600 acres of freehold land, or private land as they call it in the US, to put a plant on. On that land, there are 2 high voltage power lines that pass overhead. Very, very large capacity coming from coal-fired power stations owned by Berkshire Hathaway in Wyoming. The power tariff is between 2.7 and 6 US cents a kilowatt hour, which is unreal. Like, if you're pumping water, you're pumping through a DLE. And for us, we've got an electrolysis process to convert the chloride to a hydroxide. That is a sustainable competitive advantage. We also have access, our partners as shareholders in the Lisbon natural gas plant. The current tariff there for gas, they're on the western side of the Rockies, so not tied into the Henry Hub. There's not a lot of industry. It goes for $1.50 a gigajoule, which is really, really cheap. And most importantly, the project aligns with the US critical minerals strategy, right? So that makes us potentially eligible for FAST-41, which is coordinated federal permitting, and access to these federal funding programs. So we have put in or UBC has put in an application into the DOE. We'll then look at the Department of Defense and the US Department of Agriculture for their fertilizer production and expansion program. This is predominantly because America imports 96% of its potash and is desperate to develop and expand the production. So the deal, fantastic deal. Our friends acquired the gas plant and the leases in 2024, came to see us in early 25. We were able to put, what I would call as a pretty soft deal. So a reverse vest, where we get 51% of the equity up front for agreeing to incur US $2 million expenditure over 3 years and giving them some options. Utah Brine Corporation, which is the special purpose vehicle, holds approximately 80,000 acres of potash prospecting permit applications, potash lease nominations, and 70 lithium placer claims. So our partner has agreed to match our funding, and they'll pay a permitting fee that becomes payable when we get all of our approvals. We also entered into a well access and use license. So we get to access those inactive oil and gas wells, all the data and associated infrastructure on those leases. We pay $200,000 a year for that pleasure, and we'll pay them a production-linked royalty when we get into production. So, on the surface out there, looks like a desert. You go down 4 to 10,000 feet and it's an underground sea. The paradox clastics are a series of salt lake or salt layers, broken rock, salt layers, broken rock. And so what we're finding is that, historical wells, they've got potentially economic concentrations of lithium, world-class potassium grades, and most importantly, we don't have to drill wells to be able to sample it. So, that historic data in those wells really do give us a flying start. The exploration target for potash and lithium across the tenements is between 94 and 325 million tons of muriate of potash, or potassium chloride as it's sort of known scientifically, and between 1.9 and 6.5 million tons of contained lithium carbonate. So you are talking of a project of significant size, and it applies to both potash and lithium. Our strategy at this stage is to extract the potash as a primary product, and to recover the lithium from the tail. Recovering the potash as a primary product upgrades the lithium, and will recover the lithium as a byproduct. We have a pretty aggressive program for this project, courtesy of all of that infrastructure. So we've been able to enter into the agreement in March, put out an exploration target in April. We'll now look to do the bulk sampling from Big Indian 1. We'll then transport that down to our preferred DLE provider and run it through their pilot plant. Once we get the results and we've got a pretty good handle on the OPEX and CAPEX, we'll then look at going back to different wells, sampling them with a view to generating a mineral resource estimate in the new year. That'll enable us to finalise and put out the scoping study results. So, as I mentioned, our deep expertise in processing lithium comes from the ELI process and what we've developed over the last 10 years with Mineral Resources. So essentially it's a patented low-cost conversion of lithium chloride to lithium hydroxide or lithium carbonate using a chloralkali system where we pump it in, we run electricity through some electrodes, the lithium unbinds from the chloride, migrates across a membrane and attaches to the hydroxide. This lowers the operating costs by substituting electricity for expensive bulk reagents, soda, ash and lime, which all have to be imported. So, originally we developed this for Mount Marion so that we could compete against the brine producers. Then what we discovered is if you're a brine producer and use it, you even get further down the scale. So, we've done a number of studies over that decade, and what it's come out and consistently shown is that it can convert lithium chloride to the chemicals that are needed for the batteries at less than half the traditional cost. So a substantial competitive advantage. And yes, we are looking to, eventually license it out to Rio Tinto. That's what we'd like to do. We piloted their Rincon brine in 2023-24. We announced a MOU with them in 2025 where we're looking to design them a demonstration plant to go down into Argentina. If they commit to doing that and running it, we'll then give them a concessional license. To help us do that, we entered into a collaboration agreement with De Nora, who are one of the world's leading manufacturers of electrolyzers. And so we've agreed to jointly design, build and commission a pilot plant if requested to by Rio Tinto. The Vanadium Recovery Project. So this is an opportunity. We developed this between 2020 and 2023, where we finished a feasibility study on it. And it will be the European Union's first domestic vanadium pentoxide production project. It's currently in the project financing stage. We own 86.1% of the project company called Nirvana. It has received its environmental approvals to construct the program. We have a land lease with the city of Pori through the port of Pori. It's been funded the last couple of years by the European Union's EIT Raw Materials Fund, so the European Institute of Technology. So they've been buying equity at a pre-money valuation of 50 million euros. So they've acquired 2.2%, option to move higher. We've been approved for European Investment Bank project finance, which is great. And we received in December notification from Business Finland, or the Finnish government, that we've been successful in being awarded a 48.7 million euro grant to go against the capital costs. So essentially what we do is access the world's highest grade vanadium stockpiles that sit in a steel slag that's produced by SS or Bear. We'll then bring that in, process that, recover the vanadium from it. We have a take-or-pay agreement for the end product from Glencore. We have an MOU with Salzgitter for additional feed to come from Germany. It is, well, it's not quite shovel ready, but it's in the project financing stage. And so we're hopeful that we can get an outcome within the next 6 months on that. What has been, I think, an upside for us has been the response of the vanadium price this year. In the US, it has doubled, which is fantastic. What they realized is the previous administration was allowing the Russians to smuggle it via Switzerland into the US. There are now transparent auctions to the Defense Logistics Agency, and the prices there in the US have doubled this calendar year. For the rest of the world, they're up sort of 20%. So look, I think in summary, we do have a strong team and culture. We're all committed to turning the business around and making it a success. We've got people that are highly skilled in their various sections, be it legal, engineering, finance, mining engineering, technology, geology. So I think, Neometals, we have made money, significant amounts of money, and returned significant amounts of money to the shareholders over the last decade via dividends, buybacks, and return on capital. We're obviously not in that position now, but hope to be at some stage in the future. I'd like to thank all of our shareholders. We have a fantastically stable top 20. I'd like to thank our brokers, Euros, for covering us. I think, you have a look at the relative performance, and we've underperformed the gold, but, as we get closer to production, that should change. And we're pleased that the lithium price has improved and we now have exposure to us. So I think that exposure to gold and critical metals really does give the shareholders multiple shots on goal. Our value will increase as we get closer to production and then start to generate cash flow. And obviously in Utah, it's a very large project. It's heavily discounted at the moment in terms of the value that you see expressed in the stock. But we will go through and methodically de-risk that through the test work and studies. That discount will remove and will build the inherent value. So I think, the commodity diversification, gold, lithium sort of works for us. The business model diversification in terms of, near-term cash flow, low-risk joint ventures still works for us. The technologies and the projects, they're ESG aligned. And we've got an experienced leadership and experienced partners to bring these into operation. So I'd like to thank you very much for your attention today and wish you well.